I've made over $500,000 over the last 12 months day trading stocks, and I'm going to teach you the very first scalping strategy that my father taught me 5 years ago that I still trade every single day. It's stupid simple, it's consistent, and it's so intuitive that even a beginner trader can master it. In this video, I'm going to break down why this strategy works, how I make well over $1,000 a day trading it, and the 3 simple steps that you need to execute the strategy. This isn't going to be a long video, maybe 15 to 20 minutes, but by the end of it, you will have a strategy that you can immediately implement into your trading and a no bullshit guide on exactly how I use it every single day to make money. By the way, I want to be as transparent as possible. This is my Charles Schwab brokerage account, and if you think this is a screenshot or Photoshop, I'm going to go ahead and refresh the page, and as you can see, I've made a little bit over $548,000 over the last 12 months day trading stocks, and the reason I'm showing you this is to be as real and as transparent as possible and to show you that I actually trade this strategy every single day and I make money from it. I don't want to waste any time, so let's hop right into this video, and I want you to be locked in because I'm going to teach you everything that I know about this strategy over the next 20 minutes, and I'm going to teach you everything that my father taught me about this strategy 5 years ago, and he was my trading mentor, by the way. And I want to make this video as simple as possible so you can understand and execute it regardless if you've been trading for 10 years or for 10 days. And right off the bat, I want to think out loud for a second. As day traders, what types of stocks do we want to focus on? Well, right off the bat, at least for me, I want to focus on stocks that are showing clear momentum, that are trending in a particular direction, that are doing significant volume. I don't want to trade stocks that are just sideways and not really moving and not showing momentum and not doing any volume, because I can't make money if the stock doesn't move. So I want to focus on stocks that have a high probability of moving 20%, 50%, or even 100% in a single day, maybe even a couple of hours, right? So every single morning before the market opens at 8:30 a.m. Eastern, sometimes a little bit earlier, I sit down in my office and I create my pre-market watch list. And I find stocks that have a high probability of having momentum, have a high probability of trending in a particular direction. And I create my pre-market bias, and then when the market opens, I execute on that bias. But the first step is to create that list of stocks that have a high chance of actually moving and actually making me money. So you're probably wondering, how do I do that? What's the scan process? How do we actually execute on these stocks? And why do we choose these types of stocks? Well, that's exactly what you're going to learn in this video. And specifically, I focus on gaps. And in this video, we're going to be exclusively focusing mostly on gap ups. And if you're confused, what is a gap? I don't know what that is. Well, a gap is an overnight change in price. So for example, let's say a stock closed at $10 yesterday when the stock market closed at 4 p.m. Eastern, and then the next morning at 9:30 a.m. Eastern, that stock opened at $20. Well, that $10 difference in price that occurred overnight is known as a gap, and it literally leads to a gap on the price charts. And you don't really need to be concerned why a stock is gapping. What we care about is what that overnight change in price does to the charts. And if you're wondering, okay, why do stocks gap in the first place? Well, you have to keep in mind that the stock market opens at 9:30 a.m. Eastern and then closes at 4 p.m. Eastern. And during the extended hours, whether that's in the post-market or the pre-market, well, there are still traders or investors that are buying and selling. So sometimes when a company reports earnings after the close, well, the company's stock changes in the post-market, and then that price is reflected the next morning when that stock opens. So here's a really great example. If you're still having trouble conceptualizing what a gap is, I'll just show you an example of it. So Frog, for example, this was a gap on Friday. This was a trade that I took. This stock closed the previous day on Thursday at $47.26. The next day, it opened at $56.38. So this was a 20% gap up or so, around 20%. So you could literally see the gap in the price charts, right? You could literally see this gap in price. And I'll show you an example of a gap down as well. This was actually just from a few days ago. This was on Laser, right? So Laser the previous day closed at 210, and then the next day it opened at 163. You could literally see this overnight change in price, and this was a 23% gap down. So that is what a gap is. It's an overnight change in price. And that's exactly what I focus on in the pre-market. Those are the types of stocks that I scan for. So if it's a gap up, it's an overnight change in price to the upside. And if it's a gap down, it's an overnight change in price to the downside. And these gaps, these changes in price can occur not only because of earnings, they could occur because of news within the company, because of a crazy event within the company, because of macroeconomic data dropping, because of the president literally tweeting something on his Twitter, and that could be a reason a stock changes in price overnight. There's a lot of different reasons why stocks gap, but like I said, we don't really care about the reason. We care about what that gap, what that change in price does to the price action. And at this point, you're probably wondering, okay, first step, how do I scan for these gaps? Where do I go? So I'll show you a couple of different resources. So off the bat, a free resource that you could use is tradingview.com. You don't need to pay for an account, so just go to tradingview.com. And if you go to products and you go to screeners, you can click on stocks. And once you land on this page right here, you can click on extended hours. Those are hours right after the market closes, okay? And you're gonna see an option here that says pre-market gap percentage. If you click on that, you'll be able to sort it either in ascending order or a descending order. So if you click on descending order, that will show you all of the gap ups in order. So this was the biggest gap up on the MSGM on Friday. It gapped up 128%. The TSE is the next one at 59%. The VSME is the next one at 59%. And you can go down and you basically write down all of these stocks on your watch list, on your trading platform. And once you have them on your watch list, from there, you look at them, you analyze the gap, and you try to understand and pick out which gaps you want to focus on for when the market opens. And I'll show you how to do that in a little bit, okay? If you also click on sort ascending, this will show you all the gap downs, the overnight changes in price to the downside. So SND had a 60% gap down. The ELDN, this is actually something I traded and made money on Friday. This gapped 43% gap down, right? And this was actually one of my biggest winners. And then you, of course, put all of these on your watch list, and then you find your favorite gap down. So you could do this on TradingView. You could also do this on a website called Market Chameleon. So if you just look up marketchameleon.com, and if you go to stocks, and if you click on pre-market trading, it'll actually give you like a mini report here of the top gainers in the pre-market, the top, decliners in the pre-market, and it'll also show you the most actively traded stocks in the pre-market. So I kind of use a bunch of different resources, and that's how I create my list every morning. But I would say my primary way of scanning for gaps every single day is actually just using my platform, which is Think or Swim. And on your watch list, you're gonna see this little column here, and if you actually right click it and press on customize, you could add this function called mark percent change. So if you look that up, mark percent change, if you click on it, you'll be able to add this to your watch list, and then you could actually sort it by pressing that button right here. Let me do this. You can see mark percent change. If you click on it, right, it'll sort it here by the gap downs, where it'll show you the biggest gap downs, and then if you click on it again, it'll show you the biggest gap ups. So by using different resources, this is how I essentially create my gaps list every single morning. So this is something that you could program on essentially any type of platform. So you don't have to use the ones that I just showed you. You could program this on your own personal scanner. What you're really looking for is the percentage difference between yesterday's closing price and the pre-market price the next morning. And you might be wondering, Emmanuel, okay, I know how to scan for gaps. I know how to create the pre-market watch list, but I'm looking at over 100 stocks. Am I supposed to focus on all of these stocks when the market opens? And the answer is no. You want to find the highest quality gaps because there are certain criteria that we look for that separate a high quality gap from a low quality gap. And I'm about to teach you these criteria. So this is what you want to look for every single morning. And there's 3 simple rules that you're going to follow. And for this strategy, we are going to primarily focus on gap ups. We're focusing on overnight changes in price to the upside. And I can make a different video where we focus on overnight gap downs, but for this video, we're focusing on gap ups because I have seen so many just amazing gap ups over the last few months, and I want you to be equipped with this strategy. So the first rule that we look for is we want a gap up that ends a downtrend. So what does that mean exactly? And by the way, every morning when you're looking at these stocks, you're looking at these gaps, you're going to be looking at the daily time frame. Okay, that's the primary time frame that we use to read gaps. So let's say we have a downtrend on the daily time frame. And let's say this stock closes right here the previous day. We want to see gaps that end this downtrend. Why do we want to see that? Well, think about it. It's a downtrend, right? So the bears are in control. The sellers are in control. There are traders or investors who shorted it here, who shorted it here. Maybe they shorted it here as well. They shorted it right here. We want to see a gap that ends the trend and that surprises all of those sellers. So let's say we close right here. All of these sellers that participated in this move lower, they're making money. And let's say the next morning, it gaps right here, right? It has an overnight change in price right here. Well, how do you think all of these sellers are going to feel waking up the next day and seeing that their position is now underwater? They're now losing money on a trade that they were making money on literally the day before. Well, a lot of those sellers are going to be shocked. And that's exactly what we need for this strategy to be effective. We want overnight changes in price that end longer term downtrends because that's a powerful piece of price action, right? If it's ending a longer term trend, the chances that that stock is going to have tons of momentum that day is very high. And that's when we want to have a bullish bias and look to go potentially long. And if this still kind of sounds confusing, or maybe you want to actually visually see what this looks like, I'm about to show you a bunch of examples. But first, I want to go over these criteria. So that's the first criteria that we look for. The second criteria that we want to look for, and I tried to make this super simple, we want to see a gap up that gaps above resistance, that clears a critical resistance area. So what does that look like? So let's say maybe we have an uptrend, right? We have an uptrend, the stock is trending higher, and all of a sudden, this stock starts to consolidate and it goes sideways for a while, and let's say it closes right here. We want to see gaps that clear above this resistance area, that clear the highs of this consolidation, right? So let me kind of show you what that looks like. Let's say this is a clear resistance area, right? We made a high here, we hit it again here, we hit it again here, right? Every time we hit this resistance, we went down. We want to see it open and gap above that resistance area. And ideally, we want to see it gap directly above. We don't want to see it gap all the way up here where it's really far away from resistance. We want to see it gap directly above resistance. Maybe here, maybe here, maybe here max, right? And the more it gaps up, the less powerful it is. We want to see it gap directly above resistance because if you think about it, this overnight change in price, this gap up, is triggering a longer term breakout. It's triggering a breakout on the weekly, monthly, and daily time frame. So these are the types of gaps that we want to look for, that end trends or surprise sellers, right? Or gaps that clear above resistance and are triggering larger term breakouts. And our bias, of course, is to go long. By the way, I have hundreds of hours of free education on the internet, not only on this YouTube channel that you're watching right now, but I also have a free 10+ hour trading course that is genuinely better than most paid courses on the internet. It will help build the foundation for your trading success. And if you're someone who's looking for something a little bit more serious, you're looking to really advance your trading, I do personally help scale and coach traders from zero to consistently profitable, where I take my students under my wing and they trade live with me every single day. So if you are looking for hands-on mentorship, you could apply for my mentorship program, also in the description of this video. Let's go ahead and look at some amazing examples of this. And these are all stocks that I took from my pre-market watch list over the last 1 month. So these are all recent gaps that performed incredibly well. A couple of weeks ago, I saw the BenF in the morning, and this stock gapped from 48 cents. And the next morning, it opened at around 85 cents, which was a 75% gap up. And notice how this stock kind of ended this mini little downtrend, right? It had a nice pop. This was also a gap up. It gapped from 36 cents to 63 cents, had a really nice move higher, then kind of chopped around a little bit. And then it basically just trended lower for a few weeks. And then all of a sudden, this stock ended this trend lower, and it gapped up to around 84 cents. And look at the move that it had that day. Look at the momentum. You could see the big volume spike as well. This stock did tons of volume this day. I think it did, tens of millions of shares, had tons of momentum, and it trended higher essentially the entire day. It literally closed almost at the highs. It closed at 149. And this stock moved up over 76% in a single day. Next, let's take a look at the WGRX. This is also a stock from my pre-market watch list a couple of weeks ago, and this was just an insane trade. I mean, take a look at this. So this stock had been in a very established downtrend from essentially early September, just trending lower, and then all of a sudden it bottomed right here, and it gapped from 39 cents all the way to 87 cents. So that was 122% gap up. And this effectively ended this trend lower, right? This thing was going lower. It looked lower. Everyone who was in this short here, they're all making money. And then all of a sudden it gapped up, had insane volume that day. And this thing ended up running from 88 cents all the way to $1.46, which was a 65% move up. Now, obviously ended up closing at 114. However, the initial runner was just an insane play. And again, what did it do? It ended this downtrend. And I've seen a lot of these lower price stocks do this recently. And this is why I wanted to create this video, where I've seen lower price stocks that trend lower, they have big gap ups, and they just go on insane runs that day. I'm sure you guys have heard of Beyond Meats going absolutely crazy over the past few weeks, but what was the catalyst of the Beyond? Well, if you go back to this first day right here, this was the first day where Beyond started to run. What did it do? It gapped from 64 cents to around 101 the next day. It was a 58% gap up. And this wasn't that much of a huge downtrend, but this was certainly trending lower. And then all of a sudden we gapped up, and I traded it on this day. This was my biggest winner that day. And it was also my biggest winner the next day. But it gapped up, it ended this little mini trend lower, right? Gapped to 102, and then it went on, an insane run the next few days. I actually did not hold it overnight. I don't usually hold my day trades overnight ever, but if I did, it would have been amazing, but that's just not within my system. And then the next day, it actually gapped another 60% up, and then it went on another insane run all the way to 380, and then the next day it went absolutely crazy. And on this day, it was just untradeable for me. I couldn't trade it. And then I also scalped it on this day. This day was really readable off of order flow, off of level 2 data. So I made really good money on it this day. But ultimately, the catalyst of this entire move was this initial gap up that ended this mini trend lower. And I was able to make money on this day, and on this day as well. Let's look at one more, and this was on the PGNY. This was actually a gap from Friday, literally 2 days ago. And this stock was on a very consistent downtrend. Check this out. It attempted to move higher on this day, And then the next day, it gapped down and just got completely sold off and then continued lower. We had a red bar on Thursday. So clearly the sellers were in control, the bears were in control. And then all of a sudden, it gaps the next day from $18 or so. It gaps around 14%, 15%. And by the way, the exact gap percentage isn't very relevant. What we look at is what is the gap doing to the price action. I don't really care about the exact percentage. I don't track that. I track where is it gapping to on the price charts and what effect does that gap have on the relationship between the buyers and the sellers. And as you can see, I mean, this gap clearly ended this downtrend. It gapped above this entire move lower, and it ended up leading to an absolutely amazing move higher. And it ended up moving up about 8% that day, which isn't a huge amount. However, still it closed at the highs, closed at $22.38. And this was actually a call out that I made to my students that trade live with me. And a lot of my students were able to capitalize on this. And it was just beautiful, right? Nice trend lower. And then of course it ended that downtrend and then went on a really nice run to the upside. Real quick, let's also look at a gap that is clearing above resistance and triggering a larger term breakout. So this was on the Expedia this past Friday. This was also a call that I made. And we had a nice move up on the EXPE, and then it went sideways for a while. It was consolidating on the weekly time frame and on the daily time frame. And then all of a sudden, it gaps from $219 to around $247 the next day. So this was Thursday, and then the next day gapped up 12% on Friday. And this was a gap directly above all of this resistance. All right, let me find a rectangle so I could show you, but this was a clear resistance area and we gapped above it and we triggered a daily breakout, and we ended up getting a really nice move on the Expedia that day. From the market open to the top, it actually moved up almost 7%, which by the way, for a $250 stock, that's not a bad move at all. So this is a great example of a gap that clears above resistance and triggers a daily breakout. Now that you understand the specific criteria that we look for when it comes to gap ups, now let's talk about how to actually execute the trade. And something that's really important to emphasize is just because you have an amazing gap up, it doesn't mean you're going to take that trade when the market opens. We don't just buy when the market opens and hope we get lucky. What we look for is an actionable setup. What we look for is a high quality, identifiable setup in the first 30 minutes of the day. If there's no setup, or if it's a low quality intraday setup, I don't take the trade, okay? So we want a high quality gap with a high quality intraday setup, and that is the recipe for success. In fact, I probably pass on over 95% of the gaps that I see in the pre-market. This isn't a game of going long on every single gap up. This is picking your favorites, finding your highest probability gap ups, and then taking like 5% of them when the market actually opens, because you want a high quality gap up with a high quality intraday setup. Our job is to be selective. Now, there are times when the gap is so high quality that I will be flexible with the intraday setup, where I'll still take the trade even if it's not A+, right? Because I like the gap so much. But ideally, I want a high quality gap and a high quality intraday setup, okay? And the first really simple strategy that you could trade that I think any beginner can understand, super easy, is you wait for the first candlestick to form. And if you're liking the gap and you're like, hey, I want to try to get in this when the market opens or within 10 minutes from the market open, well, you could trade what's called a high-low. You could also call this an opening range breakout. So this is essentially when the first candlestick forms, and what you do is you put your entry over the highs of the first candlestick, you put your stop loss under the lows of the first candlestick. And from there, if the trade triggers, it'll trigger you in right here, and hopefully, of course, it continues to the upside. And if it doesn't, well, of course, you would get stopped out under the lows of the first candlestick. It's a really easy and simple strategy. Now, you don't have to trade high lows every single day and on every single gap up. This is just an option for you. This is a tool to have in your toolbox, a potential strategy that you could trade where, let's say it is a really high quality gap up. You're like, yeah, I want to look to get into this close to the market open. You could use a high low. You have this set up within your arsenal, okay? So that's what a high low is. Super simple. Entry above the first candlestick, stop loss below. So let's kind of break it down here if you want to take notes and write this down. So again, you wait until the first candlestick forms. When it comes to buying, entry over the candlestick's high, stop loss under the lows. The same thing applies if it's a short. Let's say it's a gap down. You could put your entry underneath the candlestick's low and stop loss above the highs. Now you might be wondering, okay, that's easy enough, but on what time frame? Like, I want to wait for the first candlestick to form, but is that on the 1 minute chart or the 2 minute chart or the 5 minute chart or on the 15 minute chart? And that's the hardest part about trading a potential high-low pattern. So my suggestion is if you do it off the 1 or 2 minute time frame, meaning that's either in the first minute of the day you're taking the trade or second minute of the day you're taking the trade, right? Because the first candlestick forms in the first minute, entry above the high, stop loss below the lows, or maybe the first 2 minute candlestick formed, that's 2 minutes into the day, entry above the high, stop loss below the lows. That's super, super aggressive, and you could get stopped out really quickly. In fact, a lot of gaps, they'll open, and let's say this is the 1 minute, right? This is the 1 minute. The stock will open. You'll place your entry above the high, stop loss above the lows. It'll stop you out. It'll end up bottoming, and then it'll go on a massive run, right? So it's really easy to get shaken out. It's really easy to basically get stopped out just to see that stock actually end up going in your direction. My suggestion is to do it off the 5 minute. It's a lot safer. It's more controlled, and that's already 5 minutes into the day where you could, already get a feel of how that stock is moving. All right, now keep in mind the first candlestick, you don't want it to be a massive candlestick, okay? You don't want it to be like huge. The smaller the candlestick, the better, because then you'll get a better reward to risk. All right, so ideally you have like a narrow range bar, like a smaller candlestick, first 5 minutes, entry above, stop loss below the lows, and of course this continues in your direction. Okay, this is an option for you when it comes to trading the open. You could trade the high-low setup. So the high-low is one potential strategy. Let's go over a couple of other strategies. And to be honest, guys, I keep my trading extremely simple. I think the simplest things in life are oftentimes the most brilliant, and that's what makes me a profitable trader. I keep it simple. I only trade simple setups. So what you could look for are just simple breakouts or simple retracements. They're simple. It's easy to quickly calculate your share size. It's easy to understand. It's beginner friendly. And my suggestion is in the morning, don't force the setups, but I'll talk about that in a second. So let's say the market opens and all of a sudden there's a move up and you start to get a base on that stock. Well, you can go, entry above the base, stop loss below the base, and you could potentially ride the move higher. Or maybe when the market opens, it has a move up and then you get a pullback and you have an opportunity to buy the dip and go long. Now, I have other videos on this channel that explain how to trade breakouts and retracement setups in depth. I also have a free 10+ hour course, which I highly recommend that you watch, that also explains how to trade breakouts and retracements in depth. I don't want this video to be that long, so just watch those videos after this video so you could really understand what we look for in breakouts and what we look for in retracement setups. But that's what you could trade, breakouts or retracements. And you could find my free course, by the way, in the description of this video, okay? And yeah, that's all I really trade. I trade breakouts and retracements, and in the morning I'll trade a high-low pattern, okay? Now let's look at some real life examples. Let's look at gaps that we already analyzed and talked about earlier in this video. So we have the BEN-F that ended this downtrend. It had a nice gap up. And let's go to the smaller time frames and try to find intraday setups. I'm gonna use the 2 minute time frame. That's one of the primary time frames that I look at in the morning. And what do we have here? Well, we're looking for either retracements, we're looking for high-low patterns, or we're looking for breakouts. And right off the bat on the BEN-F, I see a beautiful breakout. We open and we just consolidate in this range. So what's the setup? Setup is entry over the base, stop loss directly under the base. Very simple, very easy to identify. We don't need to overcomplicate our entry and our stop loss. And this thing went on a, what is it, almost 52% rally from that entry. And this happened in essentially 15 minutes, right? So the gap on the daily time frame was the catalyst of this move. And from there, we took advantage of that catalyst by trading a breakout on the 2-minute time frame. Let's look at the WGRX that we already analyzed earlier in this video. And let's go ahead and go to the 2-minute time frame. And what do we have here? Well, right off the bat, I see a high-low pattern, right? This first 2-minute bar formed, so you could have placed your entry over the 2-minute bar's high, and you could have placed your stop loss under the lows. Now, obviously in hindsight, that was the right move, but I did not trade this. I thought it was way too aggressive. Like I said, I rarely trade high lows unless I'm really in love with the daily gap, but nevertheless, this was a high low and never stopped out. And the second setup is actually this little breakout here. We moved up, we consolidated for a bit, kind of a sloppy breakout. I also passed on this setup because I thought it was too sloppy, but nevertheless, had a breakout entry above the highs, stop loss right under the lows. That ended up working as well. And then there was also a retracement setup here where we moved up, we retraced to the rising 20-period moving average, and you could have placed your stop loss under the lows of the retracement right here, entry directly above, and you would have been able to catch this move as well. But overall, this was a sloppy intraday chart, and that's exactly why I passed on the setups on this stock, even though I really liked the gap. Now let's go ahead and look at the beyond on the initial day of the gap. Remember, we analyzed this, gapped above this little sell-off, and let's go ahead and look at the 5-minute time frame. And by the way, during the day, I'm always looking at multiple time frames. I'm not just looking at the 2-minute or the 5-minute or the 15-minute. I'm looking at all the time frames. And I mean, just check this out. This was a almost picture perfect 5-minute breakout. It opened, it dropped, then it just consolidated for a while, and it was a picture perfect breakout and then a picture perfect retracement setup. And I actually traded this breakout and I traded this retracement setup. These two setups were essentially my biggest winners that day. Entry, easy, above the base, stop loss directly below the base, beautiful move up, and then we had a beautiful retracement right into this rising 20 MA. Look at how prices are respecting the 20 MA. That's why I use it, right? It based right into it here on the 5, then it retraced right into the 20 MA here. In this case, the entry was over this entry bar, over this kind of bottoming tail, stop loss below, and this went on an insane run. Now, I didn't catch this entire move. I ended up taking profits like right around here, which in hindsight was really early, but nevertheless, great trade. I was more kind of scalping it with bigger size, and yeah, just picture perfect breakout and a picture perfect retracement setup. Now let's analyze the PGNY that we talked about earlier. We already talked about this daily gap. Let's go to the 5-minute time frame, and what do we see? And for me, it's actually really obvious. We have a nice move up, right? And then we have a, I think, 5 red bar pullback, and we have a beautiful retracement setup right here. And I called this long over, I believe, this red candlestick. That was triggering the retracement setup. Stop loss directly below, and this, of course, went on a really nice run. And you could have even played a breakout here where it moved up, kind of based around. This was also a bit of a retracement setup right here. It retraced right into the rising 20. You could have even went long over this base, stop loss below, and you would have been able to catch this move as well. Beautiful gap up on the daily time frame, right? Beautiful gap up, ended this downtrend, gapped above a red bar, and then there were some beautiful setups on the intraday time frames. Let's also review the EXPE that I talked about before. This was a nice gap up over the daily resistance, triggering a breakout on the daily time frame. And let's go ahead and go to the 15-minute time frame. And we had this initial really bullish move up, and then we consolidated basically the entire day into a rising 20 MA. And this is why I use the 20 MA. I know this video isn't about talking about the 20 MA, but I have other videos that really explain it in depth on this YouTube channel and, of course, in my free course. So beautiful entry above the base, right? Perfectly above the base. Stop loss, you could place it here. You could have also placed it right here. Obviously, it wasn't that big of a move higher, but I'm more trying to kind of prove a point here, right? Maybe this wasn't the biggest R to R play. However, still really nice follow through to the upside. If we look to the 2-minute in the morning, let's see if there were any setups. Not really. This thing kind of just opened, had a huge move higher, pulled in, so massive tail, and just grinded higher. So I don't really see a setup here on the 2-minute in the morning, and that's why I didn't really focus on it. But later in the day, we looked at the 15. There was a nice breakout, and even on the 5, moved up, retraced, moved up, and then based the entire day into the 20 man, the 15, and we had a beautiful rally. By the way, I've had a lot of people in my comments tell me that I cherry pick only the winning setups and that everything looks good in hindsight. Well, I want to show you a losing trade that I took, I think last week on the FI, and just to show you that I also have losing trades. And this was actually a really big gap down. This was honestly too big of a gap down to really trade. It was gapping way below support, but nevertheless, I traded a high-low setup on this, or I think it was a 5-minute breakdown, but I'll show you exactly where I went short and how I got stopped out. So yeah, I think this was a high-low off the 5-minute where I went short under this candlestick, stop loss above. It triggered me in, resulted in a big bottoming tail, and then stopped me out on the way higher, and then it actually kind of went higher and sold off later in the day. Ended up being a doji bar on the daily. So it basically just went sideways all day, but this was an example of me getting stopped out. So in summary, every single morning, we look at the gap ups and we find gap ups that are either clearing over resistance or that are ending downtrends or surprising sellers. And from there, we trade the bias that we create in the pre-market on those gap ups via either a breakout or a retracement setup when the market opens. So we develop our bias in the pre-market and then we execute on that bias via a identifiable simple setup, whether that's a high-low breakout or retracement. All right, hopefully you enjoyed this video. Make sure you leave a comment and provide me feedback. I love reading the comments. Make sure you leave a like and make sure you subscribe to the channel for more educational videos. Ultimately, my only goal is to help you advance as a trader and become profitable. And also make sure you get started with my free 10+ hour course. It's genuinely better than most paid courses on the internet. I will see you on the next video. Thank you so much.